Hey folks, if you're a real estate investor looking to build your real estate portfolio, you're probably going to need some good financing advice. Today we're talking with one of the best mortgage minds in the business. Stay tuned.
So, we're dealing with predominantly real estate investors all the time now. Throwing in the odd mom and dad home buyer deal in there is fine. But, I know at Tri-Urban, our focus is mainly on the investment side. So, what's the main difference, I guess, in qualifying for a mortgage for a personal residence versus coming at you to buy an investment property? And we'll just say one investment property to start with.
Right. So the process is very similar. You're buying a property, whatever that is, single family, duplex, something like that. The real advantages of that investment real estate is you got the rents to also help you qualify for that mortgage. So it can be even easier than a principal residence just because you do have that extra income. There are some differences in down payment. That depends if you're buying something with a suite and you're going to live there. But if it's strictly investment, we're usually looking at that 20% down mark. So those are a couple of the sort of high level differences, but it can be easier than a principal residence.
Okay, Mike, great points. So you talked about using the income from an investment property. So maybe let's break that down a little bit so people understand. Like when we have a personal residence, you are now qualifying out of your T4 income or T5 income or whatever, however you earn your income. When we add an investment property and we're getting rental income from that, is that what you're now defining as the ability to use that income that the property produces as well?
That's exactly right. And even if you don't have the renters in there yet, we can use market rents from the area of sort of other properties that are similar to see sort of what those rents would be to help satisfy those debt servicing requirements from the lender.
Okay, great. So on that note, now I guess moving forward is where can a down payment? So I want to buy an investment property. We're going to shift the focus to an investment property now.
Yep.
Where can the down payment come from? I think there's some maybe unclear messages out there that maybe we can't use lines of credits, or you know, I want to hear it from the horse's mouth here. Based on your experience, where can we get down payments from?
Well, and there was a day recently when the lender said we can't use line of credits for down payment. However, that has changed. We
Okay.
can use line of credits for down payment or other sources of funds, whether that's like investments or TFSAs or even just cash on hand. And then depending on the lender, there is some other ways you can get those down payments, whether that's even from a gift. Those are not the usual requirements, but that's like an alternative lender as well, right? So there are many ways to sort of get those sources, just depending on your situation.
Okay. So I guess building off of that again, if I use a secured line of credit on my personal residence to acquire an investment property, will the bank or a lender look in any manner if I am 100% financed, I guess, right? Because essentially that's what you're doing, right? You're using money from your personal line of credit and you're getting, so we're really able to buy these assets with really none of our own money other than servicing the interest portion.
Yeah, we can do that for sure. The only additional sort of requirement there is we have to use a payment for that line of credit and put that into the debt servicing. So as long as all of that works, then there's no problem to use your line of credit. And we recommend that for many of our clients to get that down payment that they need.
Of course, I guess that's investing 101. The more we can leverage the lender's money, the higher the ROI typically. And I think in Edmonton right now, for sure, this is, a real opportunity. It's a real option for people to, invest in a property here and have the property support not only the expenses to that property, but also be able to support, the interest cost on that line of credit and maybe even give some cash flow on top of that.
Another point here to mention is we do want to keep that what you're using for down payment in a separate sort of section than your normal mortgage, just because that the interest on that loan is tax deductible as well. So we want to keep that all easily accessible for your accountant. So when you're giving them all your records, you can make sure you can write off as much as possible.
Good accounting advice, my friend. Good accounting advice. Yeah. Hey, based on now with down payments, I want to clarify the amount of down payment for an investment property. How much percentage wise down payment do we need?
So for most investment properties, it's 20% down as a minimum for what we need. If you are residing in a suited property, you can buy it for as little as 5% down. That is more the exception than the rule. Most of the investment properties or clients you're talking about are going to be buying that separate investment property, and we're going to need that 20%.
Okay, so just to clarify then, there are no high ratio or insured mortgage options. If we're coming in and we want to buy a pure investment property, a pure income property, we need 20% down payment.
That is correct. 100%.
Okay, yeah. Now, just to, I guess, clarify on the other point you made, and this is, folks, this is really a good strategy for young individuals that are just getting started, of being able to buy a property with a legal secondary suite in it, and maybe living in the lower suite or above the garage and renting the main home out. I mean, Mike, we're just going through an application right now with this exact circumstance, and they're essentially able to, live for free. So on that note, if we're buying this and you're going to reside in it, we can get high ratio financing, even up to 95% financing.
That's exactly right. It is your principal residence, so you can do that. That would be for 1 or 2 units. If you get to a 3 or 4 unit building, I believe the down payment goes up to 10% for a minimum on those. But there's some options there if you don't have the down payment, but do have that income earning and rental potential in those suites.
All right. So even if I wanted to buy a fourplex then and live in one of the units, we could still potentially get in with a much lower down payment than 20%.
That's exactly right. It's not for everybody because they're living in a single family home or they're happy where they're at. But for that right person, this can be a game changer for sure.
Wow. Wow. Yeah. So anyhow, folks, I mean, if you're, a younger individual just getting started and you're able to take advantage, this is a great way, to again, leverage out and get in with little down payment on your side, and again, use the bank's money. Switching gears, Mike, to amortizations. I know this is a little bit different. This is probably more based on lenders, but what's the typical amortization that we're going to get on a 20% investment property? And I know you've got this question quite a bit lately.
So with any mortgage that is not CMHC insured, we can go up to that 30-year maximum for the amortization. So we can put that debt over that full 30 years, lower the payment, increase the cash flow for the owner, which is hopefully being saved up for down payment on the next one, right?
Well, I guess cash flow talks, right? And I mean, talking about the next one, we hear this thing called a DCR all the time, a debt coverage ratio. So can you give us maybe the quick synopsis of what a debt coverage ratio is, a DCR?
So really the debt coverage ratio is the amount of rent that you're getting divided by the costs associated with that building. And there are lenders that need that like 1.1 to 1.2 sort of debt coverage ratio. One thing that we built in our office is a calculator because we have many lenders that we can choose from, where we can input in all the data on the client's current or upcoming rentals and see which lender works best for them depending on their qualifications.
Right. So just maybe to clarify that, maybe flip that the other way. So for example, if a property had $1,000 of expenses and the lender wanted to see a 1.1 debt coverage ratio, that means we would have to see $1,100 income from it.
That's perfect. That's exactly
Okay.
right.
Yeah, or 1,200 if they wanted to see 1.2.
Exactly.
Now looking at that specific application for a property, if you're submitting an application to a lender, and are they going to look at the debt coverage ratio of that acquisition?
Oh, for sure. They want to make sure that the new property you're getting fits in their guidelines and is going to be a good property as well. So there are always exceptions to these too. It's just, the whole picture of the client and what they're bringing to the table. But yeah, we want to make sure that not only do you want to make sure that the property cash flows, the lender wants to make sure that the property cash flows, right? That's a win-win there for sure.
Absolutely. Yeah, absolutely. So how about moving forward, Mike? Let's say I'm an investor that has, say, I got 5 properties already.
Yeah.
And I want to come and buy number 6. But say 3 of my 5 are below a 1.1 debt coverage ratio. And when I give you all my information in my portfolio, you see that, and say my debt coverage ratio is like a 1.06, under 1.1. how is the lender going to look at that a little bit different, or how is that going to affect the qualification or the income that I need to produce?
Well, and with some lenders, it's one of those like pass fail type things. So it becomes the whole story. So what are the other two properties are at? And if we're still at that 1.06, is there something that we can do which will help a cash flow? Can we refinance and get that over 30 years and increase that to 1.1? Or is there other lenders out there that have less of a concern with that, and they want to make sure that your income is good and the rest of the story is good? So like the real advantage of dealing with a mortgage broker is having that choice. So that's where we like to come in and see what your best option is.
Well, I think I'll plug you a little bit more, Mike. Having a mortgage broker that understands that investment world and how this all pieces together in behind the scenes is, I tell you what, folks, it's the difference between buying potentially 3 properties and 10 properties. If you've got someone that can present these deals to lenders and build a story and the case for you, that's what you need. So on that note, Mike, sorry, go ahead.
Well, what I
you were
was going to say
something.
is it's also, I myself, am an investor, have a number of properties with my family, and it's through making our own mistakes. I know tenants and toilets and the whole bit. So sometimes you gotta, as a saying I like to use is eat your own dog food. So you know exactly what you're getting into and what you're going through, so you can relate to that investor on the other side, right?
And I think on that note, Mike, I've got to know you. I think we're not only, we do a lot of business together, but we've become good friends. I think you are 100% willing, and I see that, to take care of the customer's best interest. And I think as a result, you can share that experience. And you know what, folks, that's stuff you only get by doing and being in the industry and being an investor and being a mortgage broker. I mean, it's just, it's worth a lot there, my friend, worth a lot. So circling back, and let's say I am an investor now, that I say I'm new to the game, and I bought my first property, and I just went to my home bank. I didn't know any better. I just went to my home bank and they give me a property. But you know what? I've done pretty good in life. Got some money saved up, and part of my financial future is to have at least $20,000 a month passive income. So I know I'm going to have to buy about 10 properties to accommodate that. I buy the 10 properties, relieve the debt, pay my operating expenses. I'm going to have $20,000 left over. But I need 10 mortgages. I know I have the down payment. What's some of the maybe strategic moves that we need to maybe put forth to, stack these mortgages up right, if you will, and just make sure that I'm not going to run out of mortgage bucks along the way?
Yeah. Well, this is a great question, because I have not met an individual that can get 10 mortgages at one institution and have that institution will actually fund those. So, and we've dealt with a variety of clients. So one of the advantages of again, dealing with a broker that has dealt with this before is setting those up in the right order. Because there are some mortgage companies or lenders that'll do sort of the first 4 properties. And then there's some lenders that say, we'll do 4 in total. It doesn't matter what number we're at. And there's some that'll say, oh, we'll only do 6, we'll only do 5. So again, it's going through all that analysis, seeing where we can piece them in at the right spots, but also aligning that with where you want to go. Because if we need to use some mortgages that as they are paid down, there's a line of credit that open up, so we can access those funds. That's one option. Or maybe you just need regular mortgages for all of them, because like you said in your analysis, the down payment is not a concern. So it's chatting with our investor client, seeing what their goals are, and then talking about not only the property you're buying today, but what is the overall plan? How do we set you up for financing for that next property you haven't even thought of yet? So having that proactive approach to make sure that we're ahead of the game and know where we're headed on the next one, even though it hasn't even come up yet.
Yeah. Well, I think in a lot of cases, and I mean, just speaking from experience, this is something that, perhaps a lot of people don't think about as, they're decide they want an investment property and they're going to dive in and buy one. And like I say, if it is in fact, their plan and part of their financial plan to actually acquire, 8, 9, 10, 12 properties, we really have to be strategic of where you're placing those mortgages, in advance to maintain that mortgageability, if you will, moving through that process.
That's exactly right. If we go to the lender that's going to do the last 4, we go to them first, we may we might be limited to 6.
Yeah.
So it's that placement is so important to make sure we can get to meet the client's goals and get that exactly what you want at the end of the day set up. And we got to do that on day one.
Yeah, and you made a good point. It's not about you and I here. You and I are helping really people get what they want, and just, I guess at the end of the day, really, if we understand that, chances are we can make it happen, right? For on an individual basis, I guess, depending on everyone's financial goals. Because I don't know about your side of the fence, Mike, but I know from this side, everyone and every investor, whether it be a single or a couple or, professional investor, everyone's financial goals are different.
Right.
Everyone has different budget, different lifestyle. And I mean, we're on the back end here, I guess, trying to merge this and make it happen for people. But one last question for you here. So I live in Toronto, Ontario. Can you get mortgages and place mortgages for out of town investors?
Not a problem at all. We deal with
I did.
people across Canada. We've done mortgages across Canada.
Yeah.
So with COVID, everything is even more online and Zoom calls than ever. It'd be great to be sitting beside you doing this convo, but here we are. So there's no problem with that whatsoever.
Yeah. And, on that note, I can say again, Mike, I'm going to plug you here a little bit, but this is, you and I have really kind of broke the business process, I guess, for our customers to make it really easy for them of how our teams communicate information and really just, I guess, make it happen in a very transparent way where the customer is able to kind of ride along and see who's holding the ball and just make it really, really easy. And I think safe for people to invest in Edmonton. And whether, that's if you live in town or whether you live across the country, we can certainly make that happen for you.
Yeah, one of the advantages too is even if you are out of town and looking to invest in Edmonton, well, we've got our own circle of network here of professionals that we can rely on in case there is something going on that you need help with. And it's just a quick phone call away. So it's always nice to have those people that are sort of in the area in case there is anything that's happening that you need some help with.
Yeah. Well, I think, maybe building off what Tri-Urban, I mean, we focus a lot on new construction and new builds. And I think having a broker and a team like you guys are, you understand our process. You've taken the time to understand how this all works and how you can best serve ultimately the investor customer, help them get what they want.
That's exactly it. Our sort of tagline here is what's in the client's best interest. And that's when you have that goal and that's like sort of your North Star, what's leading you, then everything else sort of aligns and becomes very easy.
Yeah.
And clients enjoy that and then they come back and they refer others, right? So it's this karma business model is working for us.
Funny how that works, eh? Yeah, for sure. So, hey, how much time does an investor need? So, you know what? Say we're talking with a new investor and we want to refer them your way, Mike. How much time do you need from them to get them pre-positioned to move forward?
Really, I would say as little as half an hour. And most of that, say 20 minutes to the full half hour, is just a quick chat like this. Let's discuss what you're looking for, where you're at, if there's any sort of hurdles we need to jump over, and what we can do about that for the future, being that proactive as possible. So the sooner we talk to somebody, the better we're set up for down the road. And then we can send out the online applications or do one over Zoom or something like that to get it all sorted. But as little as half an hour, we can be ready to go.
Yeah, and I think that really makes sense to have probably a consultation with you as part of our process. I know we certainly appreciate that time that you would put into that because it just gives us those parameters of saying, hey, you know what? Here's the budget. We match it to the lifestyle, I guess, to the customer, and we can really, zero in on going and finding an asset that's going to produce for these folks long term, I should say.
Yeah, that's exactly it. And then it's that first conversation is so important because it is that what is that long-term goal? Where do we want to get to? Because if it's just one or two and you're happy, well, might be a different lender product rate than it is down here. Maybe your timeline's 5 years, while someone else might be 30 plus, and that changes things too, right? So just lots of permutations there.
And there's a great way to close it off. So folks, again, it's about the relationships. You've heard me say this 100 times over. Mike and his team are one of those relationships, like I alluded to at the start, that we, rely on because they have a great track record. It's not just on a whim. As Mike alluded to, he's an investor himself. So if this is something that you think is of interest, there's going to be some links and some information below this video where you can get in touch with myself or in touch with Mike and just take that next step. Like I've always said, it's not about us, but starting to invest in real estate is something that you need information of, and I think it's just our commitment to maybe supply and give you that information so you guys can make an informed decision. So, Mike, thank you again for making time. And you know what? I'm hoping this is maybe something we can maybe do on a monthly level, maybe not to this detail, but even if we're just getting mortgage updates and where rates are and all that sort of stuff. And as things evolve in the mortgage industry, that will affect our investor customers. But I'd love to have you back and get that information at the front line. So thanks again for taking the time today.
Sounds great. Thanks for having me. And there's one constant in this industry, you wouldn't think it, but that one constant is change. So it's always great to chat.
Absolutely. Okay, folks, thanks again. Again, below the video, there'll be some information and links to have some further discussions if you'd like. Thanks again. Over and out. Bye for now.